Hello students. Now today we are starting with the sum which will not ask in your examination. So then why we need to do that sum? What is the reason? Now try to understand. If we are doing this type of sum, then it will help you in chapter number 5 as well as same chapter number 6 and even I can say chapter number 7 also. But most probably it is useful in chapter number 5 and 6 only. In 7 chapter, many less places it is useful. But this will not in your examination, but on this basis you can understand next 2 chapters very easily. From next 2 chapters 8 marker question will be there in your final examination. 8 marker question 1, second 8 marker question from 6th number chapter. So chapter number 5 8 marker question, chapter number 6 8 marker question, and that 8 marker question you can solve after doing this. And even from today you will get minimum 4 marks of that 8 marker question. It means 4 mark of chapter number 5 and 4 mark of chapter number 6. And that's why without wasting my time I am going to explain this sum. Now this is the illustration number 8 which is given in your textbook. I am reading question from my textbook and try to listen and understand. Now what we need to do in this sum? So whenever reconstruction of firm is done, at that time generally we need to prepare revaluation account, because all the assets and liabilities are revalued. Its original value is counted and then its effect is given, and that's why revaluation account is prepared. So main thing in this question is revaluation account. But to explain you each and everything, I am showing whole sum to you. In this question also, whole sum is not there, but we are doing whole sum. So, first of all, in reconstruction, what is prepared? Revaluation account, because valuation of assets and liabilities are done. So, revaluation account. Second thing, capital account, cash or bank account. These are not compulsorily we need to prepare, but as per kamalsir method this is compulsory to prepare so that we can easily solve the sum. So revaluation, capital, cash or bank, whatever is given, and new balance sheet. Most IMP things are, so new balance sheet. Why new? Because old balance sheet given in your question, and whatever changes made in assets and liability, after making that changes, we are preparing new balance sheet. And that's why I am going to take whole sum. Even it is not asked in your this question. So this lecture is very important for what? To getting 4 marks in chapter number 5 and second 4 marks in chapter number 6. Now, sir, how we can prepare revaluation account? So very easy rule to prepare revaluation account. So which is the easiest rule? If you are happy, then credit it in revaluation account, and if you are sad, then debit it to revaluation account. Only this rule will help you to prepare revaluation account as well as new balance sheet. So how happy and sad? I cannot understand exactly. Try to understood now. Suppose, now what is the meaning of revaluation? Again, calculating the value. Whose value? Assets and liability value. Now think, if we are revaluing asset, and asset increase, you will happy or sad? Sir, definitely. Asset increase, happy. Same way. Sir, if your liability increase, you have to pay something to other. Sir, sad. I don't need to pay. Same way. Think, if your asset decrease, then sir, sad. My asset decrease? No, I don't like it. Same way, think, if liability decrease, now I don't need to pay anything. Suppose government declare, don't pay tax for 1-2 years. Then, sir, happy, my liability decreases. So this is the rule to make revaluation. If you are happy, write credit side. If you are sad, write debit side. So what is the rule of happy and sad? So asset increase, happy. Asset decrease, sad. Same way, liability increase, happy. Liability increase, sad. Liability decrease, happy. On this basis, we can easily solve revaluation account. So here I can make smiley. Same way here. Sad. And on this basis, we are doing the sum. Now I am reading some and one by one giving the effect. So first of all, what is given in your textbook, I am reading. Please try to understand. Illustration number 8. Harish, Dhruvil and Manoj are partners of a partnership firm. Their profit and loss sharing ratio is 3, 2 and 1. So first of all, after reading this, I am writing 3, 2, 1 here. 3, 2 and 1. This is the ratio between Harish, Dhruvil and Manoj. Now, going ahead, as on 31/3/17, balance sheet of the firm as on 31/3/17 is given as on page number 123. So on page number 123, balance sheet is given. Now I am not reading balance sheet first. Reading next topic, that is as on above balance sheet date. Profit loss sharing ratio is changed to 1:3:2. Now new profit and loss sharing ratio is there. Old ratio is 3:1. New profit and loss sharing ratio is 1:2. That is decided. And also decided the revaluation of assets and liability of business as follow. So in balance sheet, assets and liabilities are given and they decided to revalue that asset and liability. Now, first number adjustment is given. See, first number, land value is increased up to rupees 3,50,000. So first of all, land value is increased up to 3,50,000 is given. Now in balance sheet, land is given 3 lakh rupees. Now land 3 lakh rupees given and we need to increase up to 3,50,000. So first of all, right here, land 3 lakh rupees. Now we need to increase its value up to 3,50,000. which is given in adjustment number 1. So sir, increase means plus increase value. Now up to 350 means 50,000 we need to increase. So in outer column, what we need to write? Sir, 3,50,000. So this is my first step. Now think, happy or sad? Sir, simple. Asset increase. Increase, happy, decrease, sad. Simple. So sir, here happy. 50,000 asset increase. Now how many rupees happy? Sir, 50,000 rupees happy. So write down happy side, revaluation account, credited. What we are writing? By land account. And amount is 50,000. If you have a doubt, and doubt in you, not in concept, you can easily understand this concept. Now, next, same adjustment, building value is increased by 70,000. So building value we want to increase by 70,000. Now building is given 4,80,000 in old balance sheet. So here I am writing building 4,80,000. That is given in balance sheet. Now we need to increase its value by 70,000. So sir, plus increase 70,000. Outer side, sir, total of this 2. So make total 5,50,000. Now again think, happy or sad? Sir, happy, simple. Building value increase. Then happy. How many rupees I happy? 70,000 rupees happy. So sir, write down here by building account 70,000. Simple. Sir, adjustment number 1 completed. Now I am reading second adjustment from your textbook. Machinery value keeps up to rupees 150. So we need to make value of machinery 1,50,000. Now machinery value already given, that is 2 lakh rupees. So first of all, I am writing machine value. Sir, machinery value is 2 lakh rupees. And we need to keep it 1,50,000. Now how we can make it 150? Sir, definitely we have to deduct. So decrease in the value of machinery. Said 50,000 rupees said. And I can write outer column 1,50,000. Sir, now asset value decrease. Said 50,000 said means debit side to machinery account 50,000. To machinery account 50,000. So in this way we can prepare this revaluation account, and it is very easy to prepare. Second adjustment clear, sir. Now talking about third adjustment. Investment value decrease 20%. So we need to decrease investment value 20%. Sir, investment is 1,20,000 given. So first of all, I am writing investment 1,20,000 and decrease in investment 20%. So 20% decrease. So 24,000 rupees. Decrease in investment. The outer column value. Simple sir. 96,000. Again sir. Asset decrease. Sad. Sad means debited. So right here to investment account 24,000. I am 100% sure up to this level no difficulty will be there. Next, adjustment number 4. Provide 10% for bad debt reserve and 5% for discount reserve on debtors. Sir, 10% bad debt reserve, 5% discount reserve, that we need to deduct from debtors. So debtors are given 80,000 rupees. So first of all, write here debtors 80,000. Now from this we need to deduct 10% bad debt reserve. So minus bad debt reserve 10% of this 80,000. Sir, 8,000. Now after deducting this, we are getting 72,000. Sir, next discount reserve also deducted. So write discount reserve. So what is the percentage of discount reserve? 5% discount reserve. So 36,100 and subtract 3,600 from 72,000. So 69, 68, 400 rupees. $68,400. Now think, sir, again debtors means my asset. Now it is decrease. Bad debt reserve because of bad debt reserve 8,000 and discount reserve 3,600. Again decrease means debited. So here we are writing to bad debt reserve account to discount reserve account. Amounts are 8,000, 3,600 rupees. So simple. So deducted means debited. Now next adjustment number 5. 50% stock value decreased by 10%. Now stock value is decreased by 10%, but 50% stock only decreases, not whole stock. So first of all, I am writing whole stock and closing stock is given 15,000. So first of all, I am writing here closing stock 15,000. Now some calculation I am doing here. Then after clearing the board. Sir, from 15,000 rupees stock, 50% value decreased by 10%. So 50% means what? Sir, 7,500. And its value is decreased by 10%. So 750 decrease. So actually we can say, sir, overall from stock 750 rupees decreases. Simple. So don't calculate anything else. Just deduct 750 from whole stock. So minus decrease in stock 750 rupees. So after deducting this, what will be the answer? 14,000. 14,250. This is the answer. Now again, sir, stock is my asset. Stock also decreases. said debited to stock account. And the stock account is 750. So 750. Simple one. Now sir, adjustment number 5 also completed. Adjustment number 6. Unrecorded outstanding expense is amount to 2000. Means expense we need to pay which is not recorded, and that value is 2000. So write down here. First I am clearing the board. Outstanding expense 2000. It is the liability. So we have to write at liability side. Now sir, liability increases. There was no liability. Now it is increases. We can say, just a minute. Outstanding expense 18,000. Yes sir. Yes sir. In balance sheet, outstanding expense 18,000 is already given. And 2000 is need to record it. So plus increase 2000. Outer columns are 20,000. Sir, but liability increase said. Said means debited to outstanding expense account 2000 rupees. Outstanding expense account 2000 rupees. Now sir, last adjustment, and that last adjustment is given unrecorded prepaid rent rupees 3000. So rent prepaid, it means it's my asset and that is unrecorded. So we need to record it. So here we are writing unrecorded prepaid rent 3000 rupees. Sir, happy. Here there was no prepaid asset. Now assets increases. 3000 rupees increase. So happy. By prepaid rent account 3000 rupees. Simple. So after doing this all adjustment, sir, my main adjustment entries are completed. 100% completed. Now reading ahead. From the above information, write journal entries. Sir, you don't have prepared journal entry format. Don't worry. Just a minute. Next. And prepare revaluation account in the books of partnership firm. Sir, your question is for only revaluation account. So in this question, legally, we need to prepare only this revaluation account. But to explain you each and everything perfectly, I am doing whole sum, its two effects in balance sheet as well as revaluation. How we are doing it, that I am explaining to all of you. Only and only because of this is useful in next chapters. Otherwise, in this question, only this account we need to prepare and need to write journal entry. Journal entry will be very easy. Don't worry about it. So, sir, this is 100% completed. Now, don't forget, in old balance sheet, as per adjustment, changes are done. But some items are there which are not written still now. Now I am reading that items which is given in textbook in your question. First of all, I am reading assets. Land, sir, completed. Building, sir, completed. Machinery, completed. Investment, completed. Debtors, completed. Bills receivable. Sir, bills receivable is not written here. And in all balance sheet given it is given. So write down same as bills receivable 20,000. So here bills receivable and bills receivable is 20,000. So next topic that is given bank balance, cash balance. So here you have prepared cash and bank balance. But here cash balance, bank balance, different values are given. So we have to prepare two accounts, cash account, bank account. In this sum, it is not required because no entry for cash is in this sum. So directly write down without giving any effect. Directly write down bank balance, cash balance. Now bank balance is given 1 lakh rupees, cash balance is given 40,000. So 1 lakh bank balance, 40,000 cash balance, that is given. Now next things are income receivable. Sir, income receivable also not there. So write down income receivable. Our income receivable amount is 10,000 rupees. So write down 10,000 rupees. Closing stock, sir, closing stock is already written. So then asset side is completed. Now we are talking about liability side. Sir, in liability side, capital account is there. And in capital account, Harish, Dhruvil and Manoj, three capitals are given. 365, 3 lakh and 1 lakh. So I am writing here. As per kamalsir, Bala Bidi. Bala Bidi, 3,65,000. Second, 3 lakh. And last, 1 lakh. So capital of three partners, 3,65,000, 3 lakh and 1 lakh rupees. So it's a balance of that capital that is given in your balance sheet. So we have written here Bala Bidi. Next, sir, bank loan is given. So bank loan not written here. So write down bank loan. Now amount of bank loan is 4,50,000. So write down 4,50,000. Same way, sir. Creditors also given 1 lakh rupees. So write down creditors 1 lakh rupees. Sir, bills payable given 32,000 rupees. So write down bills payable 32,000 rupees. Sir, outstanding expense given 18,000. That is already written outstanding expense. Now from old balance sheet there is no any item remaining to write down. All the things is written on the board and question 100% completed. Now important thing, close all the accounts. How we are closing it? Try to understand. First of all, we are closing revaluation account. In revaluation account, three items 50,000, 70,000 and 3,000 given credit side, and at debit side 50,000, 24,000, 8,000, 3,600, 750 and 2,000 is written. Now total of credit side. Make total of credit side. So total of credit side is 1,23,000. Here also 1,23,000. Same we are writing because here profit I know. Now from 1,23,000 I am deducting all these values of debit side. So deduct all the values and I am getting balance. And that balance is 34,650. 34,650. Now sir, what it balance called? This balance is called revaluation profit. If balance can be found or balance is credit side, then that balance is called revaluation loss. Now this is distributed among the partners. In which ratio, sir? Old ratio, which was in which they were distributing. New ratio is not considered. So old ratio 3:1. This 34,650 distributed among partners H, D and M. H, D and M in the ratio of 3, 2 and 1 and 17,325. 17,325. Second is 11,550 and third one 5,775 and total of this all 34,650. Now this is distributed among the partners. Here the revaluation account profit 17,325 11,550 5,775. Now sir, closing of this account. So we are closing this account. Now make total of this sides. So if we are making total, then we are getting 382325. Same way total of this 311,550. Make total of this 105,775. Sir, here also no values are given. So same total is here 382325 311,550 105,775. So nothing is deducted, is called Bala PD. Sir, opening balance and this is the closing balance. Writing the amount 382325 311,550 and last 105,775. Now this is the closing balance which is transferred to new balance sheet, and this same amount we are writing here. Capital of Harish, Dhruvil and Manoj and making total of it. So first of all we are writing 382325. So second 311,550 and third one 105,775 and we are making total of this three. We will get answer 799,650. Now sir, total of both the side must be same. If it is not same, then your answer is wrong. Here also, suppose cash and bank balance is given and something adjustments are there, then closing of this is also transferred to balance sheet. But here no effect given, directly amounts are written here. Otherwise, Bala BD, Bala CD, closing balance transferred to balance sheet. Same thing. No tension is there. So now making the total. And total of this. So 450, 10, 32, 20. Okay. And total is 140, 1650. 140, 1650. Same if we are making total of asset side, then also we are getting 140, 1650. I am checking the all amounts. 350, 550, 150, 96, 684, 142, 3, 20, 10, 40 and 10. Total of this 140, 1650. Now this is the important thing. Whole sum is completed. 100% sum is completed. But what is the question in this illustration? So question is only one. Revaluation account and journal entry. So these are things done by you. That is extra thing useful in next chapter. Now this whole situation is clear. I am definitely sure this is clear. But sir, how I am writing journal entry? So see my journal entry also. For that I am clearing this balance sheet and show you 1-2 journal entries. On that basis you can make all the journal entries. So here I am preparing columns for journal entry. All of you know sir, date, particular, LF, debit, credit. Now easy way to write journal entry. First of all I am writing first journal entry. Sir, simplest one. Revaluation account debited. So I am writing revaluation account debited. So which amount? 50,000. To machine account 50,000. This is also 50,000. So same. Revaluation account debited to investment account. Second journal entry. Revaluation account debited to investment account 24,000. 24,000. Same way you can make all the entries. So revaluation account debit to bad debt reserve account. Revaluation account debit to bad debt discount reserve account. Revaluation account debit to stock account. Revaluation account debit to outstanding expense account. Revaluation account debit to Harish capital account, to Juvil capital account, to Manoj capital account. Now sir, for credit side, what we are writing? Simplest one. Suppose third journal entry I am writing here land. So by land account debit. By land account debited 50,000 rupees to revaluation account 50,000 rupees. Same way, by building to revaluation, by prepaid rent to revaluation account. In this way, you can make journal entries also. No extra journal entries required in this. So, from this revaluation account, we are making journal entries, and that is very easy to write. Thank you very much. but expecting doing same sum in your homework with detail. Bye bye.